Have you ever wondered how to actually trade the breakout even before this explosive move happened? So in the trade review section, I'll be sharing with you how to actually do that so you can actually catch the breakout before the real move started. My name is Ming Jong and welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 13th of November. In this video, I'm going to share with you the market recap from yesterday's session, including a trade review in the 3 minutes time frame, which I will talk more on how to catch the breakout even before it happened. And going forward, I will be sharing my trading plan together with the levels that I'm watching for the session later. So do watch out for that. Let's just get started. So first of all, let me get back to the daily time frame, and let's start from the daily chart. So as you can see in the daily chart, so yesterday move, let's zoom in here. So we have a relatively decent reaction. That's from the immediate resistance level somewhere near 35.70 or 60, and then all the way to the previous swing low there. And we see the supply increases a little bit. However, we're still within the shallow trading range formed right here. So that's the shallow trading range right after this strong rejection bar, and now we are currently trading within the shallow type of the range. And let me get down to the hourly time frame and let's see what type of the details can we extract out from the hourly chart. So you can see that one thing that is obvious, definitely stands out to me. We have the increasing of the supply, and we have a breakdown from here. So suddenly we have this reaction down and then tested the swing low levels support here, and currently is trying to rally up to test the resistance again. So prior to the US opening session at around 10:30 p.m. at my time zone, we have seen that during the global session it's kind of still within this range, so nothing much, nothing serious. So let me just get down to the 3 minutes time frame and let's talk about how to actually catch the breakout even before it happened, before the real explosive move happened. So I think that it's quite common that a lot of the traders actually would like to trade the breakout, because once it's breakout, generally we see this kind of the explosive move and a lot of the profit to be gained from this explosive move alone. However, a lot of times that we also see that there's a lot of the fake breakout. So for example, even while we tested here and then we have another reaction, even for this type of the breakout we have another reaction down. So a lot of times that the early entry also costs quite a lot for the traders as well. So now I'm just going to share with you some of the context and techniques that I'm using to actually just catch the breakout even before it happened, and that's with relatively high winning rate. So before I just dive into the trade review for this breakout, I would like to give you a bit of the context as usual. So let's zoom out a little bit here. So you can see that there is a immediate resistance or support level previously, and the breakdown actually happened during the kind of early session during about 11:30 at my time zone in the morning. But we see that there is no downside follow through. So we have this down move and then actually accelerated down, so kind of created a selling climax, and subsequently no follow through to the downside. In fact, we see this kind of the consolidation into the trading range. So that's the relatively sharp movement, the climatic movement, and followed by a change of character. So that actually define the trading range here. So the reason that I was taking the breakout was actually just based on this trading range alone, and definitely also we see the support and resistance level. So you can see that once it's actually broken down, the support level now become the resistance has been tested one, twice, and that's the third time. So even now that's the fourth time it can successfully break out. So you can see that I have kind of marked up my trade. So that's actually a breakout trading setup. So the context is actually, like I mentioned earlier on, is pretty much based on this trading range alone. So let me just walk you through the exact setup here. So you can see that's the trading range. We've tested the resistance level, and this is the first time that the breakout actually happened. So if you have been following me for some time, you might notice that I generally avoid the first breakout, because the first breakout usually just attract the supply or demand if you just short the breakdown. So in this case, you actually attract some of the supply, but let's just take a look here. So we can see that the supply level actually is not that high, but probably the demand was not very aggressive. So this is just a first attempt, and eventually that kind of form a last point of the support before the real breakout happened. So as I avoided the first breakout, I also monitor the supply and demand. So we can see that this rally is one of the greatest rally we have seen. Probably is similar to the automatic rally, but definitely I think there is some consistent demand behind this rally, so definitely is better than this rally up. And we can notice that in terms of the reaction, so this reaction is kind of different in terms of the magnitude from the past reaction. So I would say that this is one of the better reaction that I have seen out from this trading range. And what's most important is right after the swing low form here. So let's just concentrate on this bar and probably compare it to the past few bars, maybe this or even this previous bar as well. So we see there's a spike of the volume here, but if we just take a look at the spread alone, it's probably very similar to the previous bar or even the other bar as well, the bearish bar. But definitely the progress to the downside is a lot lesser. So if we just take this, so that's the progress to the downside, and what we have in the last bar here is actually a demand tail. So that actually suggests to me that there is actually presence of the demand in this bar, or you can just simplify as a hammer. So you see the demand tail. So right after that, we want to see the confirmation, and this bullish bar actually acted as a confirmation bar. So this is just depend on this rally plus a pullback and the reversal. But the overall context is actually trading this breakout because we want to enter it as earlier as possible before the real move happen. So you can see that right after this reversal, actually just have another mild reaction and then eventually followed by a rally. So that's the actual breakout, and you can see that I actually also scale in right after the close of this breakout bar. So this is what I actually advocate for. I always avoid the first breakout, and instead I want to trade this second breakout. So you can see that right after this second breakout, so this bullish bar actually come in above the previous high here and subsequently have a brief test and then followed by this continuation to the upside. So my first entry was one of the best entry because it's kind of the catching the bottom of the swing. So we just catch the bottom here, and the real move actually just started from here on and ride it all the way up. So these are the two entries. First is based on a pullback reversal, and the second is actually the breakout. So you can see that not only that I avoided this type of the early entry or the premature entry. I catch this reversal and right at the bottom, and also in terms of the real breakout, the timing is very nice as well. So subsequently, I just trail my stop, and eventually I just get stop out somewhere around here. So this 2 bar, so showing the supply tail. So if we just pay close attention to this 2 bar alone, we can notice that there is a Wyckoff's effort versus results show up, because with a similar amount of the volume, and what we have is actually a rejection tail here. So that actually suggests to me there's a presence of the supply. So I think it's quite makes sense to just exit somewhere around the top here. So in this case, because I'm using a trailing stop, so that actually the 3rd bar here actually stopped me out. So subsequently, you can see there is another attempt to rally up, but actually failed to generate a higher high, and eventually we see this kind of the failure. So that's the trade on how I actually trade this breakout setup even before the actual breakout happened right there. So that's my early entry. Alright, so I think subsequently during the US session in the later part, there is definitely some great setup. So let me quickly point you the setup, because it happened relatively late in my time zone, so still definitely no trade. Somewhere around about 12 to 1 a.m. at my time zone. So we can see that there is a trading range form. So there's the upsloping trading range. So right after this reaction, so here's the trading range. So that's the context. And this part here is especially interesting because we see that there is a shortening of the upward thrust. So the thrust to the upside is getting shorter. So that actually suggested that there is a up momentum is fading, getting exhausted, and subsequently this is the sign of weakness. So that's the greatest reaction to the downside, and compared to the past reaction alone, so that is definitely the greatest down wave. And that weak rally up is actually confirmation of the weakness here. So that's the confirmation, because look at the weak rally. Is unlike this type of the up wave, another up wave. So this is a very shallow type of the up wave. So that actually forms a very nice setup. So you can probably take this kind of the breakout here, or if you want, I think maybe somewhere around here could be the early entry based on the forced breakout up thrust. Otherwise, maybe the continuation to the downside, maybe right after here, that could be another short entry as well, or even this type of the early setup based on the forced breakout or up thrust. So there are quite a few different type of the short setup to ride this down move. Alright, so that's trade review. Now let me get back to the hourly time frame and let's talk about the current market condition. So right now I think there isn't much changes to the market, because like I mentioned earlier on, pretty much we are still stuck within the immediate range. So that's the immediate range from the 35.10 to around 35.70 or 35.80. So we still haven't actually tested this previous all-time high level at 35.87, and also I think that is where the breakdown happened. So that's one of the level ahead, so 35.87 or 35.90. But so far, definitely watch out for the swing high level, somewhere around 35.75 or 35.80. So if it shows some kind of the rejection, then that could become a short entry. Otherwise, for the long entry, maybe you can just go back to test the swing low again. So you can see there's some support right there at around 35.10. So let's see if there's some kind of the rebound from the support level. And the next level of the support should further weakness show up, definitely is this trading range form that will be somewhere around 34.50 to 34.20. So this could provide some support as well. Alright, so that's my plan, and for the later part of the session. This is the end of the video. Hope you enjoyed it. If you'd like to learn more on how to increase your winning rate and generate more profit, definitely check out the video that's shown on the screen right now, and do remember to subscribe to my YouTube channel so that you get instant notification of my future video ideas, and also join my email list for the weekly stock watch list. Alright, thanks for watching. I will talk to you soon.